Hello, everyone, and welcome back to TradeFinder Live. It's great to be back with you all during this trading week. I'll be introducing Rob here in just a few moments, but first and foremost, we have to cover off our disclosure disclaimer agreement. If you've attended any of our live sessions previously, then you've seen this. The main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. This is available on our website at all times, so please feel free to read it in detail at your leisure, or feel free to take a screenshot of it now if you like. That's the main point to take away from it. Other than that, lots of exciting topics to discuss going into this session. The market started slower, but is doing better following the ECB conference that just finished. Interested to hear what Rob has to think about the overall conference discussion, the impact that's going to have on the markets, and a variety of other topics that I'm sure we'll have going in and out throughout our chat. So without further ado, let's introduce the man of the hour, Mr. Rob Roy.
Good afternoon, Zach. And yesterday was Monday morning, and here we are with TradeFinder, and we get the afternoon, which is great because the futures were down fairly significantly. I guess everything is, depending on the eye of the beholder, but down quite a bit from where we've been moving in to the morning. And there was that big ECB conference. Christine Lagarde was there, the head of the Central Bank of Brazil, who kind of became the star of the show. Everybody's been talking about how much they liked what he had to say. And then, of course, Chairman Powell, Sarah Eisen from CNBC was the moderator. And there were a lot of interesting tidbits. I watched the entire thing. Basically what we got is the ECB has already cut once, and they're probably going to wait just a little bit before the second cut. And Chairman Powell acknowledged that things were moving in the right direction. I think the market is probably tipping towards that 2 rate cut thing, maybe in September. I still feel like it could be more like the end of the year. December rate cut is in the play. There's not much that has changed that. Chairman Powell did acknowledge that the labor market had weakened more than he expected. So maybe the market is taking that as a potential for a second rate cut this year. So September and December would be the 2 that are figured in. But then Sarah Eisen tried to get him into talking about politics and different policies that the 2 parties, regardless of who was going to be elected, could affect the markets, and he wanted nothing to do with it. He was very stopped. We don't talk politics. Those are elected officials. We're not elected. Of course they're not. They appoint themselves. But we'll get into that in our conspiracy show, Zach, at some point in time when we talk about the Fed. But couldn't get him to go down. She couldn't get him to go down any sort of political aspects. It was just talking about the market. But I think the one little nugget that could potentially move towards that second rate cut was the fact that the labor market was weakening more than he expected. Other than that, everything was pretty much status quo, acknowledging that things were going in the right direction. They'd like to see a little more data before a rate cut, but we're only in July. So there's a few more reports before September. So I guess the possibility for for September is still there. I'm just still in the December camp, but I've been wrong before. So we'll see how things play out. All right, let's look at the markets. That's the important thing. Yesterday, when we talked, Zach, on the EWO Trader Live show, we were below the 10-day moving average and commented that we had a long way to go before the market closed and see if we could get back above the 10-day moving average. We did on the close. And then when we take a look at the movement today, back above the 10-day moving average. So I'll spread the chart out a little bit more. There you can see where we opened. We were trading lower, closed back above the 10-day moving average, opened below it today, and we're currently trading above it. I just don't really see anything that could kind of derail that moving into the close today. Of course, we have the odd holiday shortened week with basically we've had a couple of these, right? We had the Juneteenth holiday in the middle of the week and July 4th in the middle of the week. So a couple of weird weeks going on here, and just feel like the market is just churning sideways. As long as we stay above that 10-day moving average, we are constructive, is the term that I use for the markets. We still have to take out that 61.8% fib extension on that wave 5. There's potential to move up towards 570 on the SPY according to the Elliott wave algorithm. And again, for those of you that may not have done so yet, if you haven't gotten a copy of the software, go to hub.com, hubb.com, get a copy of it. It's in beta form. We see updates each week on the new things that Hub is bringing out. And by the time it's released in its full version, it's going to be even more amazing than it is now. But right now, you can get it for free. Nothing to download on your computer. It's all browser-based. So please go to hub.com and get a copy of it. A lot of you have commented on the U.S. market updates on YouTube on how much you're enjoying the software. So, go ahead and get yourself a copy of it. Start playing around with it and get an idea of how it works. Like any new software, you got to navigate it, learn what tools are available, and it's pretty amazing. So back to the markets. Everything looks good to me right here. We're consolidating this last little move up that occurred in the first part of June. As long as we consolidate above the 10-day moving average, you have to view that as constructive. We'll take a look at interest rates. I don't think there was anything that would further this little spike that we had yesterday in rates. So I think that could be coming down. And then that begs the question that I have been commenting on. Elliott wave rules, if you've been listening, when you have the C wave extension that does exactly what it's supposed to do, which is 100% extension, rate stayed right here. And then they ticked up. They're down right now. So this is yesterday's close. So rates are coming back down. There was a little spike perhaps in front of this ECB conference. But now if rates start to come back down, they fulfilled what normally happens with Elliott wave rules, that once you hit the expected extension, if you get an extended extension, if you will, you're supposed to go out and test the previous fib levels before moving lower. So I don't see anything to hold this in here. I think we probably continue lower. I think we see a lower print. The question in my mind is going to be, do we break this 100% level and head down to 161.8? Chairman Powell almost hinted that that's a possibility with his comments on the labor market was a bit weaker than what he expected. So I think we see this move down. I think we test this 100% level. That should be like an all clear sign for the markets, I think. But then if we do come down here, I think the problem is that's really significant economic weakness to get us down here. So I would expect at least a test of this 100% extension on the C wave. Then we see whether or not we move lower here. And perhaps that prompts the Fed to act in September. Who knows? But I think that that spike in rates is going to turn and retrace itself. Rates are already down today, as I said, following that conference, and I think things could turn and go back. Looking at the dollar, you would expect a little bit of movement with the moving rates, but not so much. I think this is very constructive on the dollar, staying in this trading range. I've drawn the two lines here that I'd like to see the dollar stay in line here. That's good for the equities markets. If we break above this and start to move too high in rates, that hurts companies with international exposure. And we know that there's a global economy now, and that could certainly be a negative for equities. But if we can stay just kind of in this range here, we have money we know coming in from foreign countries into the dollar, which has been the supportive move. If we can break back down towards the lower end or just stay in this range, then we're okay. And then if the worst case scenario comes out and we do move higher and break above this line that coincides with the point of the triangle and move up towards that wave 5, that move is not so far from here that I think that would be really detrimental to the equities markets. I think we could handle that. I just wouldn't want to see the dollar go higher. So to summarize, my ideal scenario is that the dollar stays in this range. If it does break out and go higher, then as long as we don't take out this wave 5 and move significantly higher from here, I think we can handle it. from an equity standpoint. In other words, still having a bullish view. So that's what we're looking at with the S&P, interest rates, and the dollar. Let's bring in the VIX real quick. And we're just still same old Led Zeppelin kind of reference that we talk about a lot.
Song remains the
Back
same.
here, song remains the same. Yep. And we just hovering here at 12 and a half. It's almost kind of amazing that we've been pegged since mid-May right here, other than a couple little blips to the upside, right at 12 and a half. And I've mentioned this before. I'm going to move this line over just a little bit more. You can see that we have a descending triangle here on the VIX, and just understand that that could break lower. I know with the descending triangle, most people think it's gonna break lower. We've talked about this so often and repeat it numerous times. Any triangle can break either direction. But if you're thinking that, well, because 12 and a half has been support all year, we're likely to bounce higher. We can bounce lower. We do have historical data that shows a single digit on the VIX coming out of the GFC. So we could break below 12 and a half and head lower. And if I spread the chart out just a bit, you can see that we actually are below 12 and a half right now. And here's the number right here, which is cool. So it gives you these little tabs over here that tells you exactly where the price is. So we're at 12.17. So we are below 12 and a half right now. And we closed below it yesterday. So a couple of days there. So is that going to give us an early signal that maybe we do drift lower? I do want to be clear that I don't think it's going to be any sort of a significant move lower if we do break or move as a move. But I think that we could just drift down. I talked about back on the S&P that I felt like this move higher would be a melt up. I don't think we're going to just rocket to the upside because it's kind of counterintuitive here, or we have almost an oxymoron in the market where we're looking towards a rate cut. But why are we looking towards a rate cut? Because the economy and the job markets are weakening. So you can see they're opposing each other, and so that's why I don't think we get any sort of a big rocket move to the upside. So I think it makes sense, and that in itself makes you a little bit nervous that the market could melt up and the VIX could melt down. So when you look at things, the market doesn't always do what makes sense. And that's one things you learn over time. You feel like the more you learn, the more you know what the markets are going to do, and they continue to do their own thing. So you have to follow what the market does. That's what technical analysis does, is it analyzes what the market is actually doing, not what you think it's going to do. But I think those two make sense, and perhaps it plays out, perhaps it doesn't. But let's look at the DIA, the market that kind of separated itself from the S&P, and I've commented on this, so I don't want to spend a whole lot of time on it. The question is whether or not this wave 5 was the completion and the retracement back to the previous 4. I tend to think that's what happened, but the algorithm is still holding this wave 5 up here, so the algorithm is not convinced that this entire move is over. And then we have a zigzag pattern, which normally happens on the completion of a wave 5. So I kind of think that's what's going on. The key will be, can the DIA get above this C wave extension level, move to the extended level of 161.8, which would then take it above the previous wave 5, and then that confirms, not qualified, but confirms in the Elliott wave lingo. There's a difference between being qualified and confirmed, but that would confirm that this is a new impulsive move, starting with this zigzag. And then the question would be, is it a new 5-wave pattern to the upside? For those of you that may be newer, we had new people all the time. Welcome to any new viewers at TradeFinder. Every 5-wave pattern starts with a zigzag. However, every zigzag doesn't necessarily turn into a wave 5. So those are the Elliott wave rules. So we are in a zigzag here. In my opinion, we've completed this 5-wave pattern, even though the algorithm is leaving that open for interpretation. So there is a possibility that this is the start of a new impulsive move, and we could see this ABC pattern, especially if we go to 161.8, relabel to a new 5-wave pattern to the upside. I think that's a distinct possibility. That doesn't mean it's going to happen. I just feel like that's possible. All right, let's go look at the Qs, and we take a look at the Qs, still where the action is in the Qs, and you can see that the Qs are pretty happy with how the results of that ECB meeting. You got Christine Lagarde and Chairman Powell in the same meeting. You can see why the futures might have been just a little bit cautious moving into that, but nobody said anything that was bearish at all. And so we're moving back to the upside on the Qs. I had talked about how this wave 5 was really extended. It was like 190%. And it was either going to be an extremely rare move to 261.8 or relabeled to a 3. It relabeled to a 3. We have held this level here of the 61.8% extension. That's what's supposed to happen. So now we look to see if this is indeed an extended wave. Now, even though it's only moving to 100%, because it was a 38 roughly percent fib retracement in the B wave, 61.8 is what's expected. So this would be an extended wave. If it moved higher, that's when I like to look at the DMI to give an idea of whether or not it is showing strength for an extended move. And in this case, it is. We talked about this yesterday where the positive directional indicator was coming down. It has turned and gone back up. The negative directional indicator has turned and gone back down. So it seems like all's clear for the Qs to continue higher, even though there has been a little bit of market rotation, a little bit of broadening into some other stocks. We'll talk about Nvidia. Gosh, they got some more news today on dealing with regulatory issues overseas, and they're going to have to fight all that. But perhaps we broaden out away from just Nvidia in the tech sector and can move higher in other stocks within the Qs. That would be great. The IWM, I think, has been a key for today. You can see that we opened higher, but we are trading back down to the 10-day moving average. We are trying, you can see this triangle here, so let me condense the chart back down. Again, cool tools here with the software. You can see that we have this triangle right smack in the middle of the trading range, which is kind of unique here on the IWM. And the movement could possibly get us to break above the resistance level or below the support level, but those are both going to be problematic on a break. We are trying to break to the upside here, and as I expand it back out again, you can see that we did open up here. We did close above that upper trend line, which is the set of lower highs. And we opened above it. Looked like maybe we're going to take that out, but now we've come back down. So where does the IWM finish today and tomorrow? Does it confirm this breakout move or not? Everything has to have a follow through or confirmation day. And so we'll be watching to see where the IWM closes. It was very encouraging earlier in the day, but as we move into the afternoon, backed off just a little bit and moving back towards all of the Mag 7 stocks that we talk about so often, almost getting boring talking about the same stocks all the time. But just the fact that it's trying to break to the upside, I think, can be viewed as a positive. If you're a believer, as I am, that the small caps are at least an indication, nothing set in stone, but an indication of risk on, risk off, then even any sort of potential bullishness I think is a positive for the equities market in general. Now, what would negate that is if this becomes a false breakout move and the IWM breaks down and we head towards support, which is still a possibility. That could still happen. But, once again, wave 5 finishing, not above 100%. You come back down to the previous 4, which it came down to that 190 level and then consolidated. You have consolidation, you go into one of the 3 corrective patterns, flat zigzags or triangles following the completion of a wave 5. We did exactly that. And now we're just waiting to see, do we confirm this upward breakout or is it the false breakout and we head lower? So we'll need to watch that throughout the rest of the week. The holidays coming and maybe into next week before we really know. But at least at this point right now, and all we can do is analyze the data that we have at this point, it doesn't look too negative as far as where we are with the IWM. All right, so let's move into the crypto world. And you can see here, looking at the cryptos, we had a really nice move. Yesterday, when we were looking at where things were going, it looked awfully constructive on Bitcoin. Nice little bounce off 60,000, got above the 10-day moving average. But now we're giving some of that back today, and that's a little bit concerning. We're back under 62,000. It'd be nice to see this when they give us the end of day print. I know it trades 24/7, but you also know that they do roll it over and give us an end of day print for charts like this, where you're at end of day charting. So can we get back above that 10-day moving average? I think that would be really constructive in the cryptos. But what looked so encouraging yesterday, not quite so much today. We still are off the 60,000 level, and that's still good, but it would be better if we could close again above that 10-day moving average. Looking at Ethereum, we right back up to that 3,500 level, which needs to hold, and we had broken below it. We tested it, and it looked like maybe we were going to move above it, and yet we couldn't on the close, and now we're trading back below not only the 3,500 level, but the 10-day moving average on Ethereum. So can they turn and move back higher? We'll be watching that over the next couple of days as well. It's really important sooner rather than later that we get back above 3,500 on Ethereum if you're long Ethereum. Bitcoin is just, we got to hold above 60,000. Well, we're above 60,000, but we're not above 3,500 on Ethereum. So that's the difference between the two. Let's look at oil. Oh my gosh, yesterday had a big move up in oil, and we're getting follow through today. I had mentioned this yesterday during our Evo Trader Live that once, and I've been through this, so I don't want to go through it again, but it was this classic of an Elliott wave pattern. I've made the comment that this whole chart could be in the corrective patterns of an Elliott wave textbook, where you had the A, B, C. Then we went into an expanding triangle. We broke out, tested the previous level, came down to the extended level, and then we retraced back up. And when a zigzag pattern ends, you quite often retrace the C wave. All that stuff happened. We did that yesterday. So then I was like, all right, could that be the end of the move higher in oil? And yet look what's happening today. Even in today, we're continuing to move up. Now, we are a little bit away from the 10-day moving average now. So maybe that gives us a little bit of a break. Perhaps by the close, we get back below this B level, this level right here. But so far, we're still above it. But there is a little bit of separation from the 10-day moving average. So we're a little overbought on oil, but we're coming into peak driving season. And it sure would be nice to see some sort of a breather in oil. Now, the thing is, this is clearly a new impulsive pattern to the upside, and the A wave in an impulse. I mentioned to you that every 5-wave pattern starts with a zigzag, although every zigzag doesn't turn into a 5-wave pattern. But on the completion of all this corrective stuff, we've started into a new impulsive move. And where the A wave ends is the hardest part of forecasting an Elliott wave. So we tend to just let that play out, and then we have tons of rules and guidelines on what to do from there. So that's where our higher percentage comes in. So we're just letting this A wave play out. And as I said, Elliott wave rules normally retrace the C wave. We've already done that, and even still moved a little bit higher today. So where do we close today is going to be really key on oil. At some point, we're going to have at least a B wave correction here, even if it's not significant. But we should see some sort of a break in oil here soon. And the fact that we're a little bit overbought on the 10-day moving average may mean that that's coming sooner rather than later. We'll have to wait and see. Looking at SLV, which, by the way, is a precursor of what we're going to look at for a case study consideration for today. looking at all of this stuff here, this is also a whole bunch of Elliott wave rules combined into one, where we had this 5 wave, didn't go to 100%. We came back down, but we're still technically in the 5 wave because we didn't make it back down to the previous 4. We caught ourselves here in not only a zigzag, but we also have a triangle pattern here. We are trying to break out to the upside here of this triangle on SLV. And can we hold that breakout move into the close? That's going to be a key. And then if we do, because even yesterday we still were in this triangle where we had the upper trend line showing the lower highs. Today is the first day that could be considered a breakout. But again, we have to have that second day follow through or confirmation day. So this is going to be a little bit speculative here. But we're also going on the fact that we have 2 zigzag patterns that are both moving to the upside. This one, I feel like the wave 5 could continue higher, where I was a little bit suspect on where that wave 5 was with the algorithm before. I feel like this is spot on, and perhaps we complete this movement higher, considering multiple patterns saying that the SLV is going to move up. Now, with all that said, the reason it's still speculative is this triangle has not confirmed the breakout. We do have today's move. There you go, extended the lines on the triangle, and there's the breakout today. But we need tomorrow to confirm that breakout move, if indeed we hold it into the close today. And if we get the follow through day, then I think we're good to go on completing these zigzags, one of which goes all the way back to the beginning of March. That's the big zigzag pattern. And then we have a complex C wave in that zigzag that has the secondary zigzag, and then it's further complex with a triangle. So this, I mean, if you wanted to go through, I said USO was a textbook on corrective patterns. You could add this right behind it on SLV with all of these multiple corrective patterns all moving in together. So if we're going to show SLV, we got to show GLD as well. So let me go ahead and bring that in, and we take a look here at GLD. That's in a triangle, not quite all of the other stuff going on that SLV has, just a really nice triangle pattern here on GLD. You can see that we are consolidating a little bit longer, but a pretty nice triangle pattern. So can we break here? We have a very low ADX that's still going lower, but gosh, that's getting awfully low. We're starting to break below that 10 level, and historically, a very low ADX means that a breakout is imminent, but doesn't have to. The ADX can continue to go lower, but I really feel like GLD is going to make a break move here soon, and who knows what direction it's going to be. We sent out a strangle on GLD to our alert subscribers at ewotrader.com yesterday. The wave 5, very small extension, did move back to the previous 4. Wasn't much of a retracement here. Elliott wasn't a big fan of a 23% corrective level. He wanted to see it move at least 30%. We didn't do that, so we didn't get too much of a wave 5 extension. And then in the end, which to me makes sense because those were both smaller than normal, we ended up correcting into a symmetrical triangle. So I do think we're going to see a bit of a break on GLD. When remains to be seen when you're consolidating, but we've been really consolidating sideways for a while, so I would feel personally that the breakout is sooner rather than later. But again, market doesn't care what I think. But this is a nice looking triangle, and I think something that you could look for a breakout. But there is absolutely, unlike the SLV, where we have that triangle and we're trying to break out today and we need the confirmation to the upside, that we also have 2 zigzag patterns to the upside, leaning you to think that the SLV will break higher. The GLD is just more along the lines of this is a triangle, can break either way. And then the end game here is don't forget that triangle rules. You don't pick a direction. So the temptation with SLV, and we're going to do that, is to go long because we have two zigzag patterns to the upside. But we have to also understand that there is a possibility that we could break the other way. It's really clear on GLD, not as clear on SLV that we could go both ways, but those are indeed the rules. But we're still going to take a speculative shot at SLV moving higher for our case study consideration for today. All right, so let's move into taking a look at a few stocks of interest before we get into our levels of case study considerations from the past and looking for a new one. I wanted to show you Tesla. We talked about this yesterday. We had broken out of this trading range, and I mentioned to our alert subscribers yesterday, we wanted to see if we got a follow through today, and we did. It's almost like people knew yesterday, but Tesla did come in and show more vehicles being delivered than expectations. So they beat expectations on deliveries. That's why we're getting the follow through today. So that big move higher there. And now we have a problem where we had a gap up today and we're too far away from the 10-day moving average. So I don't think you want to chase this right now. But I think we're back to looking at a potential long trade here on Tesla. You can see that the DMI is about as constructive as you could ask for. If we were doing an article on the DMI, that's what you would show as that's the supportive move. We have the ADX curling up. It's above 25. We have the positive and negative directional indicators moving in opposite direction with great separation and continuing to move in their respective directions. So that's as good of a DMI as you can expect. So it does seem like there's going to be some follow through here. I heard some of the commentary on the financial networks today with the approval of Elon's payment package. Imagine his net worth is going up substantially over the past couple of days, and I'm sure that's true. So be a little bit cautious, though, with this gap up and the situation of the distance between the 10-day moving average. I don't think you want to chase this today. On top of that, calls are going to be juiced. The premiums will be added IV. That's what I call juiced. So I think you let it calm down a bit, maybe a little bit of backing and filling as we go through this holiday period. And then that gives a potential entry, because it does seem like now there's not a whole lot in the way stopping Tesla from moving up here towards this resistance area. The next resistance area that happens to be right around this 250 level right there. That's where it seems like Tesla's going. I know we're at 226 right now. It's not that far away. But yet, with this separation, I think we could get a little backing and filling here, and maybe you get a slightly better entry. I don't think we go vertically up to 250. We could. I just don't think we do that. So I think the prudent move, don't chase Tesla right now. Let it calm down a bit. Let some of that volatility come out. Let's get past the time decay of the holiday week, and then see if we don't get a little slightly better entry here. Maybe down around 220 or so on Tesla with a little bit of quietness, but certainly interesting. Then I also wanted to show Nvidia.
Quick, I just wanted to hop in real quick. While you're on that Tesla chart, you did a great job extensively covering the daily there. We had a question from Will on the weekly. If you wouldn't mind jumping over to that, just looking for an entry to the downside, but don't want to jump the gun.
On the downside, here's the weekly chart on Tesla, and with this, it seems to have more upward momentum. So I don't know that it's a bearish trade. The weekly chart has just gone through just basically a textbook situation here on corrective patterns. So there was the wave 5. There was the move back to the previous 4. It did it with multiple zigzags on the way down, which is normal. So then we did that. We completed that. You can see where it was. We went right down to it. And then we moved up in an upward zigzag. Then we zigzagged here. And this is probably turning into a big flat And if that's a big flat, that means that we should go a little bit higher from this movement here. So, we held 100 back here in January, and then it looks like with these zigzags down that this will wind up being a big flat. And if it is, then that means we should move back up towards these highs right in this area here. That should be where we go. So I don't think there's a short trade here on Tesla at this point. They managed to avoid an Armageddon type movement, which would have been back here on the daily chart, breaking to the downside out of this triangle and coming down to test these lows from April. That doesn't seem to be in play anymore. So I would say that the daily chart and the weekly chart are in agreement, and that does go with Elliott wave rules. Always look at the higher degree that where you should move back higher here. I just don't think that we do it in the short term. And if you're wanting to go short here just on the short term here, I wouldn't do that either. I don't think it's going to be a big enough move. There's no guarantee we're going to fill that gap here. We will fill it at some point, but in the short term, little backing and filling here before the expected move to 250, and then that completes that flat on the weekly chart. So I would stay leaning a little bullish in the short term here on Tesla, and then we'll see what happens once we get up there. They managed to break to the upside out of the triangle, and we go with what the market's telling us, and that's to look long. You have to also factor in the fact that oil moving higher and moving significantly higher is probably aiding in market thought on, let's move back. And we've just gone through a period, I believe we discussed this yesterday, Zach, as well, where some of the auto companies were maybe backing off a little bit of their commitment to moving towards EVs. But now with oil moving back up so significantly, perhaps start looking back towards that. Again, I mean, I'm old enough to remember when they started creating diesel automobiles, not just the big trucks and all, because oil had gone up so much in the 70s with inflation that was occurring then, and diesel fuel prices were significantly below at that point in time. Now it's the opposite, which is interesting, below regular gas prices. And so auto manufacturers started coming out with diesel-powered cars, which was a nightmare. They were ugly. They were loud. They all had that black smoke, that comes out from diesels. And so the auto companies are going to go with what's going on. So perhaps we start to hear rhetoric of, maybe we're rethinking our movement away from EVs. Maybe we'll stay in that space and continue to look towards electric cars. So that's what's occurring with Tesla. I did want to talk about Nvidia because they do have some regulatory stuff going on where antitrust regulations from foreign countries are being talked about. It doesn't seem to be affecting the stock too much. I still stand by my opinion that I don't think the movement with Nvidia is over. The fines could be up to 10% of their revenues. That's significant, but it doesn't seem like the market cares about that, that's going to play out. And we'll see, it just whether or not that's just rhetoric and somewhat in politically, just saber rattling, trying to make a name for themselves, or whether or not it plays out. But so far, we are below the 10-day moving average, but consolidating nicely, I would argue, from this big move up into the split and moving sideways here and post-split. I've said that I don't think the move in NVIDIA is over, but I do think we're just going to move in maybe even less than a 45-degree angle, but more in that 45-degree angle following these big splits. You don't have this kind of dynamic moves to the upside like we had back here at the beginning of the year, and then once again into and a little bit after the split. That stuff ends after a big split like that. I talked about this before. Institutions have so many shares now following the big split, and they are likely going to sell off some of those shares, keep a position depending on their weighting in Nvidia, but they can sell some shares and take some gains at the same time, so they get a win-win there. But the fact that they're selling a little bit offsets some of the retail buying that comes in post-split as the stock's more affordable. But I don't feel like the move is over in Nvidia, especially as we're starting to look towards rate cuts. And I just don't think it's going to be so volatile of a move. You just understand that you're probably going to see more of a creep higher in Nvidia rather than these crazy moves that we've had higher. Another good, interesting trade to look at right now is the EEM. You can see we are right smack in the middle of this triangle. I mentioned this yesterday as well. We're starting to see the ADX move up a little bit here. I use the analogy of a volcano. You have quietness here in the consolidation. You look at a volcano, it looks quiet and peaceful on the top, but we don't know what's going on with the lava underneath. Is it bubbling? Is it getting ready to erupt? That's to me when you have a nice consolidation pattern and you have the ADX moving up. I think that's exactly what's going on. So I do feel like the EEM could break out. No idea what direction it could move, but it seems like that's a pretty decent trade to look at right there. The width of the triangle is just barely enough to make it worthwhile doing. So it could generate, it's probably not going to be a big significant profit, but you could have a reasonable profit, maybe in the 20 to 25% range. We normally look for 30% or above in these, but still, when you're not picking a direction and you can generate 20 or 25%, that's something that's reasonable. So something to look at there. Now let's go ahead. Let me go quickly through our previous case study considerations here so that we can get into questions. So AXTA is starting to break below this level that it needed to hold. Right in here, I was hoping that it would hold right in this upper trend line area there at 35. We broke that. We came back up and tested it. We're breaking below it. This is kind of a personal preference thing here. We're probably coming down now towards this 33 level, and maybe that's the final line in the sand. That would definitely be the stop to exit. The fact that we've broken below these highs here around 34 is the area that I wanted to see it hold, and we were trying. We closed below it. We opened above it yesterday, but closed below it. We're trading right at it now. So this is a personal preference one. So whatever y'all think on whether or not to close this out, the hard stop is here at 33. So if it breaks that, then we actually probably start looking short on this stock. But the key will be, can we close back above 34 today? If not, because we closed below it yesterday, that counts as follow through. And then I think you could just say, hey, even though it might hold 33, we're just going to get rid of this one and then move on. GDX with the miners in gold, as you would imagine, taking directive from the metal itself, is going into consolidation. We do have that upward zigzag pattern, but we also are in a bit of a triangle, just like GLD is, and we're in a complex C wave. So if gold does break to the upside, you expect GDX to break to the upside, and if you're following technicals here and are following this position, you need to stay long as we stay above this B wave, even with this triangle. And we know that it could break lower, all the major moving averages converging together. But you have to stay long here until it shows us that it's a downside breakout and breaks below that B wave. So here, that still looks pretty constructive to move up. We talked about the EWT for Taiwan. It's hung in there really well. They just actually reported some good economic numbers over in Taiwan. So I think this looks good to continue to move higher. 56 is where we have an expectation to go. And we are above the 10-day moving average. So that one seems to be working quite nicely. We'll stay there. And then last week we looked at good old Mr. Softy, Microsoft, with an expectation of a move up to 475. And that seems to be well underway as well. So really the only one that's problem is the AXTA. And that's a personal choice, whether you just take an exit there, take a loss and move on, or stay long here. But everything else looks pretty darn good. Especially Microsoft does look really poised to move up to that expected 475 level. Now you can see we have a little bit of a dichotomy here where the positive directional indicator is coming down. Now it does look like it's trying to swing. That's not as much of a concern because the negative directional indicator is going down. And yet we see the ADX turning up. That's really interesting to see the ADX turning up while the positive directional indicator is coming down. I think we're going to see that positive directional indicator move up. I think we could actually see a pretty decent move higher in Microsoft. But I do feel like that one looks great to move up to its 475 level. So I really like what we're looking at with Microsoft there. And so as I mentioned, SLV to the upside will be our case study consideration for this week, even though it is speculative in nature. But we're going to put some faith in these two zigzag patterns with the expectation that we move up here towards this 30 level. So with that, Zach, we'll go ahead and take a few questions, and then you'll come back and show the folks how they post ideas, which is another really cool feature of this software, is the social media aspect of it. I think it's fantastic.
I couldn't agree more, and thank you for a very insightful update on this week. So yeah, let's go ahead and jump into some Q&A, get as many questions through as we can, and I will show the idea on the platform, as Rob mentioned here at the very end. Trade Simple from YouTube here says, would you expect a market correction in 2025, 2026?
I would. I think that there's a likelihood that we'll have a buy the rumor, sell the news type of scenario, that we move up into the election. We move up into the first or second Fed rate cut, depending on whether you think September happens first or just wait till December. And then I think once we actually get those cuts, I think there's going to be, especially if they don't cut in September, and they wait till December, there's going to be a view that the Fed is late to the party on cutting rates, and that we could see some weaker economic news, weaker labor market news, and by the time they start cutting, it's viewed as being a little too late, and we see a bit of a correction there. How long it'll last, we'll just have to wait and see. But yeah, I do think moving into the beginning of 2025, there's a high likelihood that that's when we'll see the correction. So it's once the Fed actually cuts. So we move up. The rumor part is moving up into the cut, and then once they finally cut, then all of a sudden realization hits that things aren't very good, and it's going to affect earnings until the rate cuts cycle through, and that'll take some time. So I think the length of the correction depends on whether or not we get that September cut or not. If they wait all the way to December, as I think they will, I think the correction could be a little more. But we'll see how that plays out. But that's my thoughts. So, yeah.
Thanks, Rob. Next up, we have Steve here, who says, bought ETH after you talked it up and holding at a loss since. And if I could preface it real quick before you answer, it's important to remember that we are not money management by any means. We are sending out what we're doing, and of course, Rob and Jeff's recommendations. But it's on the individual subscriber to manage their accounts. And also with ETH, I believe you still have a bullish outlook in the long term, if I'm not mistaken.
Yeah, and just to be really clear, I just look at the charts, and when we do the crypto show on Hub Financial, we have people on that know far more about crypto than I do. And their expectation is, and that's what I was quoting, is not my viewpoint, it's their viewpoint, that Ethereum is going to outperform Bitcoin and could be significantly higher by the end of the year. So in no way was either of us saying that it's going to make a big run in the near term. This is a longer term play, second half of the year type of a move, and it hasn't dropped that much. I mean, it's been right here around 3,500 for over a month. So if it's at a loss, it shouldn't be at much of a loss. And the viewpoint is that it rallies into the second half of the year. So if it can't get back above 3,500, there is a risk that it goes down to 3,000. If it can get back above 3,500 and take off, then I think it could go higher. But that's 6 months away. So nobody said it was going to move in the next 2 or 3 weeks. This instant gratification stuff is makes it very difficult on traders. So I'm just reading the charts, and I'm reciting what smarter people tell me, and that's their viewpoint. That you'll see that they know more about the behind the scenes things than I do, but never has it been that Ethereum was going to move in the short term. It was always been it's going to outperform Bitcoin and have a nice run into the end of the year. So 6 months from now, let's talk and see where Ethereum is. And then, if they're wrong, then they're wrong. Everybody's wrong sometimes, but that's their viewpoint.
Very well. Thanks for the added clarity there, Rob. Next up, we have a quick question here from Donnie. Is Elliott wave patterns still a solid strategy on lower time frames, such as hourly or even 15-minute candles?
Absolutely. I know I'm not a big candlestick guy. I know a lot of people are, but yeah, I mean, I look at intraday charts. I look at 3-minute charts, and I can tell you, I've been doing this a long time. You all know I've been trading Elliott wave since 2001, and it doesn't matter the time frame. I look at 3-minute charts. That's my favorite. That's what I like to look at. Everybody can have their own favorite time frame, but Elliott wave patterns work regardless of the time frame. There you can see on the 3-minute chart right there, and you can see what's happened today. We had that little move down, and then we moved back up in a wave 5 here, and just a very classic 5-wave looking pattern. Looks like we could move a little higher into the close, but we're getting awfully close to that wave 5. Everything we talk about, every single Elliott wave rule works in any time frame, no matter how far you break it down. You go down to a tick chart, it still works. So yes, the short answer to the question is yes. It doesn't matter what time frame you look at. All of those rules stay the same. Look at this right here. Let's just use this as an example. We had a 38% correction on the wave 4, right at the 38.2% level. If you've been watching, where's that supposed to go? 61.8. Where's it at? Right now it's at 60.67. We're almost at 61.8. So this is just a classic textbook 5-wave pattern that's occurred on the 3-minute chart on the SPY today. Couldn't have performed better than what's expected out of an Elliott wave pattern. So yeah, the answer, all that translates to yes on the answer to your question.
Very well. Well, that was a great example to show. Next up, we're going to go over to Abhishek. I hope I pronounced that correctly. Forgive me if I did not. Thank you for the charts on IBM last week. It is running up well. Could you please check out EHBN and break down the chart structure? Thank you.
EHBN. Is that right? EHBN?
Sorry, no. B as in Bravo. H as in, I don't know, helicopter. V as in Victor, and N as in Nitro.
Oh, okay. Biohaven. Okay, so yep, I transpose some numbers there. We had this wave 5 down here. I think we talked about this one before. It's awfully close to this 5 wave, and then it's bounced back up. Hasn't quite made it back to the previous 4. I assume this is a biotech stock. I'm not real familiar with it individually. With bio in the name, I'm assuming the biotech stocks are really difficult to forecast where they are, because who knows when they're going to announce news on what they have going on. But from a technical standpoint, it's concerning that wave 5 was basically one bar, but we came back up and have consolidated. By rules, it should go back to this previous 4. The possibility still exists that we go further into the wave 5 tap box. We got right down to the beginning of it, and so we could go lower just with a 26% wave 4. Not a whole lot of faith in that to go lower. But if this wave 5 is done, then perhaps we bounce back up to 40. But that's not a very clear chart. And there's always the risk of unexpected news coming out on these kind of stocks that can move it. So you just have to be aware of that and understand that's part of it. So as long as we continue sideways here, if you're long this stock, as long as we stay above this trend line right here, I think you're safe. Stay long as it's above. If it breaks below that, though, there's nothing to hold it to coming down, at least testing that wave 5 low and moving lower. But if you want to be long the stock, that's where your stop is, right here. And so that would be, just to give you an actual price, would be in the 32.80 area. So if it broke 32.80, then I think you have to get out. But as long as it stays above that, I think you can be long. If it breaks below that, I think it's a good short. So lots to talk about there on that one.
Yes, indeed. And that was a good chart to look at. I don't think we've looked at that one in quite some time. Let's go over to, this is back to USO actually for Maria. Rob, do you think there is a zigzag starting in December?
A huge zigzag? I sure hope not. We can measure it and see. It certainly looks close. Whether or not this actually nullified it, let's see. That correction came down pretty significantly, but not enough, just 66%. You're right, Maria, that is a qualified zigzag pattern. I hate to see that. I hate to see USO at 90, but it sure looks like that's a distinct possibility at this point in time. It's definitely a qualified zigzag. If we take out this A wave high, which we are awfully close to, so we're right here now. If we take out that A wave high, it becomes confirmed. So it's not confirmed yet. It is qualified, but it's tantalizingly close to being confirmed. And if it does, then, gosh, I guess we have to shake our heads and look for a $90 USO. But maybe we get a little bit of a short-term break here on the separation from the 10-day moving average, but good spot there. That is a big zigzag pattern to the upside that is currently qualified and very close to being confirmed. Zach, you and I were talking about this beforehand, so if there's anybody that was watching the latest Roaring Kitty news on CHWY, CNBC actually took a little bit of a shot yesterday that said shoot up and spit out. And I know he came out and said that he had a 6+% stake. And then you got the wild spike. And then we've done nothing but go down since on CHWY. So big stake not working out so well. And just like back with the meme craze during the pandemic, he's now coming under fire, regulatory fire, for potential front running. So, when you're in the industry and you're sending out stuff like this, it's pretty dangerous. And so that's what he's facing now. But this just shows you
that real quick, Rob. I just wanted to make sure that the reason it is dangerous and it is viewed as front running is because, as you informed me, because I was a bit confused as to some of the allegations in the lawsuit, that he does hold a securities license, and so that makes a world of a difference in your influence or impact that you might have on the retail.
Yep. You have to be real careful. Now I know we just sent out the picture of a dog, but when you show people your actual account statement, that it becomes very, is that investment advice? Are you just making comments? Are you just making social media comments? Or are you giving investment advice? Nothing really from a regulatory standpoint came out of the whole meme craze. And it probably goes away here because that's really hard stuff to prove when it comes out to it. But then it brings you under scrutiny, which it makes you wonder, why would you want to subject yourself to that unless you were maybe hoping that other people were going to help move the stock in your direction? That's where the negative speculation comes from on there, is what's the motive of doing that? So anyway, I know there's a lot of retail traders that think, oh, he's a champion of the average guy and all this, but then we've been really clear on retail trading, no matter how many people band together, don't have the power that the institutions do from a volume standpoint. So it's just unrealistic. So,
or to buy 6.6
anyway.
stake company. Yeah, absolutely.
Yeah.
So
I want everybody to do well, and good luck. So I hope he does well. But this is why the average person needs to stay away from that kind of stuff. That's all I'm saying. I'm not, wishing anything bad on Roaring Kitty. I hope he's very successful, but let's not do things that can get the average person killed in a couple days. That's what can happen when you participate in this kind of stuff.
Endanger those that don't have the same resource capital. That's the exact opposite of what we are aiming for. So, all right. I see we are 3 minutes after the hour. We still have tons of outstanding questions per usual, but we do still need to show the ID on the platform. So you tell me, Rob, I'm happy to stay on as long as you like, but I know you, myself, and everyone else needs to get back to the markets too. So.
Yeah, especially this holiday shortened week. So let's take one more question, pick one out, and then I'll let you show hosting SLV.
Very well. All right. Drum roll, please. The last one for today is going to be Amazon.
Oh, you picked a good one. Amazon, you listen to the financial networks and they can't say enough good things about it. That's the only thing that makes you nervous. But yet it's moving nicely to the upside. The DMI is stellar, so it certainly looks like it wants to move higher as well. So hard to say anything bad about this chart. You can see that we went to the 100% extension on the Zig Zag right here. So then the next level is 161.8, which coincides exactly with the midpoint on the tap box on the wave 5. So it does seem like that's the next stop on Amazon, and that price is right at 205. Was saying that I didn't think there was any stopping it from going to 200. Well, we're there right now. The problem is we're at 200 and the forecasted price is 205. So I think it might be just a little bit late right now to try to jump on the Amazon bandwagon. We're a tiny bit overbought right here from the 10-day moving average. We could go right up to 205 and then come back down, or maybe we bump our heads on 200 like we did back here a couple days ago and come back down. But the issue here is that the wave 5, the midpoint is exactly where that C wave extension is, and then what happens from there. So I think we have to. It's tough to chase this one at this point in time, but it certainly has done everything it's supposed to do.
Awesome. Well, that was a great session, Rob. Let's wrap up with going over to the platform and showing everyone how to post the idea, the case study consideration for this week. We had a great comment come into the chat that I'm going to show here in just a moment. As I always like to say, this is the jumping off point menu view of the platform once you sign up for beta access. As Rob said, it's totally free right now. We don't know if that will change, so definitely sign up while you can on that link. I'll send it in the chat one more time before we wrap up. Again, this is a menu view, a jumping off point of everything the platform has to offer. You can see the excerpts of these in-depth pages here. Normally I go through the themes, but I want to switch it up this time For those that might be joining us, I will go back through the themes, or joining us for the first time rather, I will go back through the themes on another session. But for this one, we had a special request on how to show the after hours or extended hours data, which I'm very happy you asked that, as I'm sure there's plenty of other people out there that would like to know how to access this. So what you're seeing right now on my screen in this teal to baby blue is going to be the prior and post of open and close for the extended hours. And to show this on a chart, all you have to do is go to settings. You'll go over here to date axis, and then you'll see show extended hours. By default, I believe it's going to be unchecked. After you check it, hit OK. You will now see those appear for whatever chart that you might bring up. Important to note that it is dependent on the time frame for that individual position, as there's different data for each symbol, of course. So you're going to see variations in what data is available for different time frames. So just keep that in mind as a note. Let's go over here real quickly before I go over to show how to post the ideas. I want to show where our discussion board or group thread for our beta testers feedback rather can be found. So once you click on this little messages inbox symbol logo next to your profile, you'll see the beta testers feedback as the first group available. And anything that you run into at all throughout the platform that you have a question on, might need support on, or just want to discuss with other members, members, then you can just post whatever question or comment you have within here, and either support or other members have the option to interact with you from there. All right, so more detailed tutorials and tours of the platform coming soon. As you can see, we have this little light bulb up here on the left side of the right toolbar. And as I clicked into ideas, I can now see all of the ideas throughout the whole community. I can go to my idea specifically, which I think I only have one right now. Need to post another one here soon. You can go to votes needed and see which ones that I haven't interacted on yet. As you can see, the space is constantly growing, so we're having an influx of ideas, more and more ideas each day as we grow. So we always like to encourage those to interact with all of the members on this platform with the ideas, whether you agree, disagree. There's detail to add there, but for time purposes, I will save that for another session as well. Real quickly, we have an idea and a post. What I like to differentiate between these two is a post is essentially a draft idea. The criteria for submitting an official idea is almost there, but there's a few things that you need to see play out. So you can put all of that in a post as your draft, and then once you see that criteria is met, then you can change it into an idea like we're going to be posting today. Creating an idea is essentially can equate it to paper trading, as all of the data, all of the real-time data rather, and all of the metrics about the trade as if you were actually trading it in real life are going to be available here, except there's no risk. There's no actual capital that's on the line there. So, excuse me, voice seems to be going out towards the end of the session here. Now we're going SLV to the upside. And so we will go over to the symbol search, type in SLV real quick, make sure that you're choosing it from the right market. We will go over to the target price. I think you set up towards the 30 level. Is that right, Rob?
That's correct.
And the time frame on that?
Should happen 1, 2. Let's do the 3 months.
3 months, you got it. And so real quickly, you can see these preset intervals you have to choose from. You can always go to custom as well, go down to the very specific day of the calendar if there's not an interval here that is something you are looking to choose from. And so, sorry, you said 3 months?
Yep.
Alrighty, there we go. And we will come back to make this pretty after this session wraps up. And other than that, I will just go ahead and pass back over to you, Rob. There's plenty more to discuss on this platform, but as I said, we'll have very detailed tutorials, webinars coming out here very soon that will focus and dial in on each of the individual pages. So.
Sounds great. Great job as always, Zach. And hope everybody has a great 4th of July holiday, celebrating my birthday over that time frame as well. So hopefully you all shoot some fireworks in celebration there. But thanks as always for spending some of your trading day with us. We really enjoy doing these shows during trading hours. I think it adds an awful lot to it. Zach was instrumental in making that happen, so I think it's fantastic. And we will see how things may take us till next week to get to answer some of the questions that we posted or talked about throughout this session with the holiday shortened week. But other than that, enjoy your holiday weekend, and we look forward to talking to you again next week. Take care, everybody.